Well, the shareholders obviously should be pleased with the second half of the year. First half of the year was a tough half, but we more than tripled the operational EBITDA in the second half of the year and moved margins up from 8% to 18% again in the second half. EBITDA was about 94 million in the second half versus 30 million in the first half. So much improved, pretty much across the business. A content business, which is about 65% of our business, was up more strongly in the second half, having had a good first half on the top line, not so much on the bottom line. Digital and data and analytics and digital media also had a stronger second half from a profitability point of view, but top line was a little bit slower. And technology services had strong, both halves were very strong. So all in all, a good end to the year with momentum into 2023. And we're guiding to a growth of about 8 to 12% top line for this year in 23. Obviously, growth has slowed because interest rates have risen so fast and had an impact on GDP and on spending generally. Clients, I think, are probably a little bit more hesitant going into 23. They delayed finalizing their operational budgets and then their marketing budgets, but now putting them into place. Our client list is dominated by the tech companies. About 50% of our revenues come from tech companies, but we don't see material differences between categories in terms of spending or spending plans. I think this year, generally, clients are probably being a little bit more cautious. They're probably unable, Jeff, to get the price increases that they secured last year. Last year, we saw clients getting price increases of as much as 30% over 18 months. And given what's happening to inflation, it is pegging back. I don't think it will go to the 2% that the central banks would like to see it at. I think we'll have to live with higher inflation, say 3% or maybe even more for some time, because it is pretty sticky. It's not as transitory as people once believed. But in that environment, there's enough flexibility for us. And the digital ad platforms this year in 2023 will probably grow by around 7 to 8%. And the technology services companies, the digital transformation companies, probably around low double digits, around 10%, 11%. So the two major addressable markets for us will continue to grow in 23. Beyond that, I think 24 will be similar as we go into the US presidential election. Probably have to wait for that to see US growth and GDP growth recover significantly.